Today we got some new DD on ASRT. As always, this is a penny stock, a lot of implied risk. Just know that before walking into any of these could go down just as easy as they can go up. I know usually they go up after we talk about them, but as always, they could go down just as easily. This one's ASRT. It just got over that $1 mark hump, so it is sitting at that top for the monthly rate. But if we look far back, all the way back over a year, or even 5 years for that matter, it hit a high of $30, and that's when it was called Depomed. They changed their name recently, or back whenever they had the whole scandal with opioid crisis. They had a very big scandal there, and they dropped all the way down from their high down in 2016 of $25 all the way down to a literal pennies, 37 pennies here. That's the low, looks like. As you could see, if we could just get this revenue producing again, this is a easy 5-banger. Could be even more if we get all the way back up to our all-time highs, but that's going to be years down the line if you even want to wait that long. But ASRT is a therapeutics company. They currently have 8 FDA approved products. So if we go down their product line, we could look at their marketed products. They have 8 of these so far, and they're looking at getting 2 more FDA approval. So as you can see here, we have 8 FDA approved products for various conditions, and then they have 2 more on the way. So that's one big catalyst that could greatly improve the stock price. The other one is on Monday here. They are about to hit the NASDAQ compliance rule, which is a 10-day compliance rule. If you are close above $1 for 10 straight days, you are now NASDAQ compliant. So that's another big catalyst that you could see as soon as Monday to take this price up drastically. Today we're at pretty stalemate. And this is not by no means telling you that you should buy this, but simply just due diligence. As in today, you could have bought the dip and already been up 10%. February 12th, they registered a direct offering of 34.3 billion or million rather, and that is at 98 cents per share. And those were sold to institutional buyers. So institutional buyers bought 34.3 million shares or $1 million of share, and that is going to net the company 32.1 million. So yes, raising capital, but that is fine. Share dilution is not the worst thing ever. And it's also very, very hopeful whenever we see, institutional ownership into this business, because they are going to bag hold this thing until it gets back up. And they're already in the green in this position since they are getting a direct offering at 98 cents per share. So that's what probably a lot of people think that the fair value is for this business, or value that they would pay, get a large portion of money in, $34.3 billion worth. It's very hopeful, actually. $34.3 billion at 98 cents per share. As for revenues this year, that's going to be announced on March 11th. Now, I don't expect too much. They did do good during coronavirus. I know that much, but that's just another catalyst to keep note of. So we got the 2020 financial results, potential guidance for next year, potential FDA approval. So a big move for catalyst wise with penny stocks. It's a big reason why penny stocks move up and down, is the big catalyst, because these could change a company so much. With revenues in 2019 exceeding $57 million and a market cap of $174 million, you can see where the potential is. That's only a 3 times price to sales ratio, which is pretty affordable for the market we're in right now, especially with penny stocks. So with any slight adjustment, if we get 2 FDA approvals and that adds 20 million of revenue, you can see where this thing's going. But we see this price resistance here at under around 98 cents or whatever, but there's a strong resistance at the $1 mark, and as long as it stays above this $1 mark, there is nothing that's going to bring it down. And I think that is very true, that it's not going to go anywhere lower because of that institutional ownership. So anytime it dips towards that $1, it's a very, very good buying opportunity if you are into this. But this is all just due diligence. Keep that in mind. But we'd be oblivious if we didn't talk about the forthcoming issues, which is the opioid crisis. So they acquired Nucynta, but they loved this company and rejected a $33 per share acquisition offer from Horizon Pharmaceutical, and that ended up being a pretty big mistake. But this is just one of many of the drugs, and this is a big reason why the share price went down from 25 all the way down to the pennies. Is because the sales decreased so much. At one point, Nucynta's sales were more than the entire company now at $183 million the first year they acquired them, the first 9 months actually. But that was down from 207, and we could just see these numbers decline all the way down year to date. Year to date, they're looking at operating loss of $9.5 million. Same time last period was $6.6 million profit. But they ended up getting out of this. This is the big turning point here, is they ended up getting out of this terrible, terrible deal that they got themselves into, and they licensed it actually for $10 million up front plus a $1 million license fee of $135 million per year for 4 years. So they really did get bailed out here by Collegium, okay? And it's just a Reddit page right here, but I like this DD that he found. I think this is the real turning point for ASRT. ASRT, and I think we could see a run up at any moment now. We're at 106 right now. $3 is very, very possible. That seems to be the common price target for a lot of people. Also, I think 150 is a more reasonable price target short term, 150, especially if we see the catalyst go, and then we could see this $3 mark back how it was about a year ago. A little bit more than that. August of 2019 is when we saw that. But we could see hit that. That would be a reasonable market cap, especially if March 11th's earning call ends up being okay. If that flunks, I don't see too much downside in that because the revenue is already not the best as it was back in 2016, 2017, so no one expects too much here. People are more worried about the future earnings, so that's 2 FDA approvals are very, very big. That's something you should keep on your watch list. So I would just keep this on your watch list, do some further due diligence. Don't just buy this because I said so, but I would add it to the watch list. Watch out for those catalysts, see what happens. This could be a potential runner though going into 2021, and we could see a huge reversal back to the numbers that it once was at. As you can see, this thing has taken roller coasters since its inception in 1995. So we see some huge hikes up and down, all the way up to 30 at one point, dip back down, all the way up to 25 at one point, and then dip way back down to all-time lows. So that you could see that there's a support line well above where it's at right now. So a lot of upside, a lot of 100% upside. 150 is my short-term price target. $3 seems to be everyone's price target. I don't know how quite they get that, but 150 makes sense with the market cap and the future revenue. But that's ASRT. Add that thing to your watch list. Check it out. Do your first year DD. If you enjoyed this, if you want more penny stocks, let me know. But I'll see you in the next one.